Hello and welcome to my channel, where I share my insights on the stock market and investing. Today, I'm going to talk about First Republic Bank, or FRC, a regional bank that has been in the spotlight lately due to its financial troubles and rescue package. Is FRC stock a buy or sell in 2023? Let's find out. First Republic Bank is a commercial bank that specializes in private banking and wealth management for high net worth individuals and businesses. It has over 80 offices across the US, mainly in California, New York, Massachusetts, Florida, and Texas. It has a market cap of about $2.6 billion and AP/A ratio of 1.6. FRC stock has been on a roller coaster ride in the past few weeks, as the bank faced a liquidity crisis triggered by the collapse of two other mid-sized lenders, Silicon Valley Bank and Credit Suisse Group. FRC had exposure to both banks through its participation in their loan syndications and securities lending programs. As a result of these events, FRC had to suspend its dividend payments on both its preferred stock and common stock, which was a big blow to its shareholders. It also had to delay its first quarter earnings report, which was originally scheduled for April 24. It also had to borrow billions of dollars from the Federal Reserve to meet its obligations. To restore confidence and stability, FRC received a $30 billion rescue package from nearly a dozen larger banks, including JP Morgan Chase and Citigroup, at the suggestion of Treasury Secretary Janet Yellen. The banks agreed to add deposits to FRC at market rates, which would help improve its liquidity and capital position. However, this move also raised some concerns among investors and analysts. Some questioned whether it would be enough to solve FRC's problems, or whether it would just spread the risk of contagion to bigger banks. Some also argued that it was a bad policy that created a false sense of confidence and moral hazard. FRC stock price has been volatile since the rescue package was announced. It gained 10% on Thursday, but then dropped 17% in after-market trading. It closed at $14.13 on Tuesday, down 0.21% from the previous day. So, is FRC stock a buy or sell in 2023? Well, that depends on your risk appetite and time horizon. On one hand, FRC has some competitive advantages in its niche market of private banking and wealth management. It has a loyal customer base, a strong brand reputation, and a diversified revenue stream. It also has a low valuation compared to its peers and historical averages. On the other hand, FRC faces significant challenges and uncertainties in the near term. It has to deal with the fallout of its exposure to Silicon Valley Bank and Credit Suisse Group, which could result in losses or lawsuits. It has to cope with the impact of suspending its dividends and delaying its earnings report, which could hurt its shareholder value and credibility. It also has to manage the implications of receiving the rescue package from larger banks, which could affect its earnings, margins, and independence. Therefore, I think FRC stock is not for the faint-hearted or the short-term traders. It is only suitable for long-term investors who are willing to take on high risk for high reward. If you believe that FRC can overcome its current difficulties and resume its growth trajectory in the future, then you might consider buying some shares at these depressed levels. But if you are not confident or comfortable with FRC's prospects or performance, then you might want to stay away from this stock or look for other opportunities elsewhere. That's all for today's video. Thank you for watching, and don't forget to like, comment, share, and subscribe for more stock market analysis and investing tips. See you next time.